The Nifty is starting positive. It's about 0.25% higher. Sensex as well, 0.2 higher.
The markets are down, what, 0.5%, 0.6%. More close to the lows of the day rather than the highs of the day.
We're now down about 0.5%, but through the day, actually, it's been a session of weakness.
Anyhow, let's come to mid-caps. The mid-cap index has also felt the pressure today, about 1% drop on the mid-cap index.
Markets fall for the 7th straight session, even as other Asian markets end with handsome gains. Sensex drops 300, Nifty gives up the 10,700 mark.
Relief for the Anil Ambani-led Reliance Group companies. 90% of lenders agree not to sell pledged shares by promoters till the 30th of September. SBI's Rajneesh Kumar calls for a review of the loan against shares model.
Yes Bank is the top Nifty loser after Reserve Bank reprimands the bank for disclosing details of a confidential risk assessment report, warns the bank of taking tough regulatory action against it.
Aviation stocks fall on higher oil prices. Interglobe Aviation and SpiceJet both lose more than 3%. However, Jet fares better on fundraising buzz. Sources tell cnbc TV 18 that the company is planning a rights issue to raise about 4,000 crore rupees.
And mid-cap index loses 1%, dragged down by NBFCs among other stocks. Repco, Edelweiss and L&T Finance were the key laggards. Well, those were the top 5 headlines from Dalal Street on a day when the indices went from weakness to weakness. It was stark because it came against a backdrop of good performance by Wall Street and Asian indices. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. And over the next 30 minutes, we will talk about what happened, the stories which mattered. Our guests will take your questions. And to help us do that, we have Deepan Mehta, member BSc NSC, and Ashwini Gujral on the charts. Gentlemen, thanks very much for joining in. But let's start right at the beginning and rewind the clock back to 9 and take in what the global cues were, how we started, and what happened from there on. Lata.
Well, as I said, the early morning, the cues were actually positive in that the US markets had risen about 400 points and the Asian shares too were all up about 1 to 1.5% on hopes that the US and China will be able to eke out a trade pact. But for India, the global cue was perhaps negative because crude was higher. Nevertheless, nothing accounted for the severe underperformance. You know, mid-caps are down 1%, Nifty almost 1%, and in a backdrop in Asian shares, indices, almost all of them were up about 1.5%. While crude is a factor, my sense is the other big factor is this promoter leverage issue. Now, first you had other problems with real estate companies and NBFCs. Now there is a third problem of leverage companies, and it is not one-off. It seems to be a bunch of promoters who are in trouble. So now the market is worrying if the mutual fund investor will continue to repose faith in the system and continue to pour money. So it is MF flows that are the new worry of the equity markets. Though, of course, the problem is in the debt market, not really in the equity market. Your thoughts on individual performance?
So, I mean, all red, Lata, right? I mean, so mid-caps, small caps fell a lot more than the Nifty. Bank Nifty was down 0.7%. So, yeah, I mean, across the board, there was a fair bit of pain. Energy, PSU banks and FMCG were the top sectoral losers. If you want to put blame, these are the 3 areas which should get the maximum. The Nifty losers on your screen, Indiabulls Housing was down the most. TCS was down. I mean, actually, IT stocks generally did quite okay, but TCS stood out with that 3% odd cut. Bajaj Finserv was down. Reliance Industries was lower. There was ITC and JSW Steel, which were the other losers by a close. The gainers were Bharti Infratel, ONGC was up, and there was Z, which ended the day. Actually, Z at one point was up 3.5. It lost from the day's high to close about 1 3/4 higher. Broader losses coming in on KPIT. KPIT actually was down far more. It recovered, but was still down 7. IRB Infra, Repco, Radico, Sequent, and Tejas Networks. Tejas Networks, I mean, huge volumes. There was a big cut, 14% cut there. Broader gains in the recently, sort of troubled companies. DHFL rose. There was, of course, the ADAG pack, Reliance Infrastructure, Reliance Power. There were other ADAG stocks as well, which ended up. Lata.
Okay. Well, some of them lost a little bit from the top, but largely the pack retained most of its gains. Let's check out what our guests have to say about the shape of things. First to you, Ashwini. Well, it's quite a sharp correction, and actually we've broken the 10,650 mark, which has repeatedly been a support level. What next?
See, crude has changed everything. Whereas, if crude was kind of, in the acceptable zone of 50 to 60, you would have found support here, but that fundamentally changes things. And now even large stocks are coming off, the macros, etc., come into the picture, Reliance, TCS. All of these guys are weakening right at support. So my sense is that we are now moving into a lower range of 10,200 to 10,650, and the market will gain momentum on the short side.
So the thing to do is to sell any rally, small, big?
Sell any 40-50 point rally on gap up, on better global markets, etc. Unlikely that you will see a big short covering, because even if crude comes off, a dollar or two may not make a great amount of difference. So any sort of positive news should be used to sell.
Okay, we'll come back to you for more, Ashwini. To the second headline now. The Anil Ambani-led Reliance group of companies saw a relief rally in today's trade after the group reached an in-principle standstill pact with over 90% of its lenders. The lenders have agreed that they will not sell any of the shares pledged by the promoters till the 30th of September. This is second such deal in recent times. Last month, promoters of Z Group had entered into a similar pact with lenders. Promoter borrowing from the mutual fund industry has now come under intense public scrutiny, with experts fearing that investors' money is at risk in such loans and in such pacts not to invoke pledged shares. We got up with SBI Chairman Rajneesh Kumar, and here's what he made of the situation.
I think the promoters pledging their equity, I think that is something which needs to be watched on, and it is not the right business model. Because if you have pledged your equity, it means that your stake in the enterprise must be deducted to that extent. Then your net equity has to be determined. So that is something a debatable issue, but over leveraging your own equity, I don't think it is a very good idea. Any sector, it is not untouchable for the banks, but the quality, banks or NBFCs themselves will have to be very mindful of this fact that the quality is not compromised.
Okay. We got a question coming in. Kishore N from Chennai has written in with a question on Reliance Capital. He's been holding shares of the company at 465.5 rupees. He's a long-term investor, wants to know if he should hold or sell. Deepan, what would you tell him? Reliance Capital?
See, it's not the best NBFC to own, but I think the way the valuations are for Reliance Capital, it doesn't make sense to sell also at these levels, as in when the resolution plan for the entire group takes shape and we see confidence coming back into the group, you will see a resurgence for Reliance Capital shares. At that point of time, you should think of switching out of Reliance Capital into some of the more promising NBFC. But for the time being, it's best to remain invested. It's been a sort of consistent performer, and there's some value in subsidiaries as well, and could expect some more corporate action from that company, which would unlock more value. So I would say remain invested, but at trading bounce when stock is up 30-40%, and likely look for exit opportunities and switch into other NBFC.
Okay. Now, I take your point about Reliance Capital being better off than other Reliance ADAG stocks, but his buying price is 450. So it's come a long way from there, and all the fall has happened in the last 8 months or so, from July, August, from the time of the debt market, IL&FS issue. We have seen this NBFC, like all other NBFCs, fall. Ashwini, what do you make of the entire ADAG pack, the set of stocks?
Get out. See, these 10, 12, 15% moves happen because of short covering. No fundamental fund manager is going to touch these stocks, I mean, corporate governance will become a major issue. So I don't think these guys are bottoming out. These are just, short covering moves because of news flow, etc.
Okay.
Okay, so that is advice on the ADAC Pact, Reliance Capital. Well, we move on to the third story. Yes Bank was a top Nifty loser after it came under fire from RBI for disclosing details of the confidential risk assessment report. Remember, Yes Bank had released a statement claiming nil divergence late last week. RBI has warned Yes Bank of regulatory action and also rebuked it, saying nil divergence was not an achievement to be publicized. We caught up with S.P. Tulsian earlier on this issue. Let's listen into his opinion.
I don't think that there has been any kind of problem in the past when the banks have reported the divergence and the report, because that has been seen usual with many of the banks having reported the divergence, and that's how the media and people at large came to know. And I don't understand why the RBI has objected for this time. But I think that the stock is seeing just correction because of the stock scene having gone into the overbought position. We have seen it rising by 32-33% prior to that on a single day. So probably, yes, the things are seen getting liquidated. And sometimes what happens that many of the retail investors, they buy the stock at a higher level and get panicky the moment it corrects by a couple of percentage also. So maybe I think considering all those things, the stock is seen to, in the morning also I have said that 210 is seen to be a good level to enter into the stock as an investor.
Okay. Well, it's still north of that level that Mr. Tulsian was advising. There is a question I wanted to ask Deepan this myself, but one Siddharth Sharma from Mumbai has written to us with a question on Yes Bank. He has been holding 1,600 shares of the bank purchased at 330 rupees a piece. He wants to know if he should hold or sell. Deepan, this is a characteristic of the markets. A lot of people would be stuck in this share. Do you think now is the time to sell out, or now is the time to keep the faith?
I think now is the time to keep the faith. A lot of uncertainty is out of the way. And anyway, you've seen such a huge damage. Maybe it's good idea to even average at these levels. We had a new CEO taking charge of the company, and the balance sheet quality also has been kind of reaffirmed with RBI's risk assessment report, although we'll keep on getting into whether it was to be disclosed or not. That apart, the fact remains that there was no divergence against major divergences in the past, which had kind of a negative impact on the stock. And now I think all that is left is for the new CEO to come out with his strategy, vision, and next quarter numbers. Hopefully there will be no more skeletons within the bank, and that should, I think, drive sentiment. What goes in favor of Yes Bank clearly is the valuations at sub 2 times price to book, about 11-12 times trailing 12-month price to earning multiple. It is by far the cheapest private sector bank, and it has a fantastic franchise, great distribution network, excellent technology platform, and has been a consistent performer over the past several years and a great wealth creator. And the new CEO also comes with a very good reputation. So I think you should be able to manage the growth going forward. And as and when we see good quarterly numbers coming from Yes Bank and the balance sheet quality remaining stable to improving, we will see a sharp re-rating of the P multiple upwards, and that will drive the stock price higher. So I am keeping my faith in Yes Bank for the time being. Hopefully nothing more negative comes out from that company, and we could see the stock going back to that 250-300 rupees range within the next few months or so.
Okay. Point taken, Deepan. Looks like all the negative is in the price and a new dawn with a new CEO. But let me ask Ashwini, what are the charts saying, Ashwini? Yes Bank.
See, again, this crude prices going up is a macro event. Yes, today possibly Yes Bank kind of found buying, but whether that buying will continue and the macro headwinds will not hit Yes Bank, that remains debatable, because till crude is near 68-70, I think all rallies on banks will get sold into, more so in PSU banks and NBFCs. But overall, unless you are like a one-year investor on Yes Bank, I don't think it's quite a short-term buy.
Okay.
Okay, here's the fourth one. Aviation stocks fell on higher oil prices. Interglobe Aviation and SpiceJet both lost more than 3% each. However, Jet was higher on fundraising buzz. Sources tell CNBC TV 18 that the company is planning a rights issue to raise about 4,000 crore rupees. So let's stick with Jet for a bit. Ritu is here to tell us more on that exclusive. Ritu.
Well, Prashant, if you remember last week, Jet Airways had made a public disclosure that the bank-led provisional resolution plan for the turnaround of the company had identified a funding gap of 8,500 crore rupees. So the next question was, where will the company be raising that money? Remember, 21st of February is when the company will be holding a shareholders EGM to take approval to expand the capital base, to convert a portion of the debt into equity and appoint some bank-led nominee directors on the board of the company. What is important is that a large portion of that 8,500 crore rupees will be raised via a rights issue, which is to the tune of 4,000 crore rupees. And this will be done at a steep discount to the current trading price of the company. We understand from our sources in the banking industry that Jet is likely to price this at anywhere between 125 to 150 rupees per share. Do remember, even earlier, Etihad had said it would invest on the condition that it would invest at 150 rupees per share and no more. Of course, SEBI exemptions are required, and that is something that the lenders in the company are yet to receive, but that is the way that they're looking to raise this fund. Also, another 1,700 crore rupees will be raised via a share and leaseback of the aircrafts, and lenders will convert 800 to 1,000 crore rupees of the company's debt into convertible instruments.
Okay, I take a point, Ritu. It's just that if the rights issue is done, you may not need SEBI permission to sell it at 150 rupees because anyway it would be diluted. And as it is, there are lenders who have converted debt into equity. So maybe the price could, even without SEBI permission, be offered at that price. But anyway, let's listen to SBI Chairman Rajneesh Kumar. As you know, we spoke with him. We put this question to him about the next step in the Jet Airways resolution. And this is what he had to say.
We should wait for 21st when the company is holding their shareholders meeting. There is a process which we had said that the process is around. First step was board meeting, then there is a shareholders meeting, there are approvals. This, you know, Jet Airways we have taken under Project Sashakt, and there is an oversight committee appointed by IBA. So they will have a look at the entire structure and the resolution plan. If the rights issue is proposed, then of course the filing of the offer document and the approval of SEBI.
So that is Rajneesh there. Deepan, any thoughts on Jet?
See, I think it is event driven, and the kind of equity dilution that they are thinking of means that minority shareholders may get not such a great deal, and then servicing such a huge capital is always going to be a challenge. Right now, I think a lot of speculative activity is taking place within the stock on the hope that there'll be change of management and the performance will improve significantly, and it'll be able to ride out this particular challenge which it is facing. But I am not that hopeful of the long-term prospects of Jet Airways. Although aviation looks interesting, I think from an investor perspective, it's better to be invested in Indigo rather than Jet or SpiceJet, given the kind of massive market share position which Indigo has. And it's gradually increasing also with the likes of Jet Airways getting into trouble, and there could be some issues in terms of flight disruptions taking place in that company. So I think the best way to play aviation is through the market leader, and Indigo also is available at reasonable valuation and could display decent growth rates going forward, subject to crude remaining more or less around these levels also. So while you may have trading bounces in Jet Airways, and one could play that depending upon news flow, but for long-term investing, we prefer Interglobe Aviation.
Okay. Well, actually today SpiceJet and Indigo were lower because of crude prices, I assume. So Ashwini, any thoughts on these two stocks, SpiceJet and Indigo?
Again, you know, all of these guys will lose whatever they gained because of crude prices coming off. So, you know, anywhere where crude is an input, like paints, etc., all of those industries, if they're holding up, they are likely to lose their gains.
Okay. Well, we move on to the last, the fifth story of the day. The mid-cap index ended the day in red after a 1% cut dragged by NBFCs. Repco, Home Finance, Edelweiss and L&T Finance were some of the key laggards which we saw today. We got a question coming in. Shashank S from Hyderabad has written in with a query on Indiabulls Housing. He's been holding 2,500 shares of Indiabulls Housing. His cost is 787 rupees a share, and he wants to know whether he should hold or sell. Deepan, Indiabulls Housing, what are your thoughts?
Yeah, again, I think, Indiabull Housing, Reliance Capital, stocks like IIFL, Edelweiss are all great stocks in a bull market. And they'll give a fabulous return when everything is steady and liquidity is abundant within the system. But that doesn't seem to be happening over the next few months or so. So one should look for exit opportunities at every trading bounce that take place. And these are highly volatile stocks. Indiabull Housing, news flow or technical positions do guide which way the stock price moves up. And this is the time to try and improve the quality of the portfolio, be it NBFC or any other sector. So my advice to the investor would be to remain invested for the time being, because the stock has corrected as much as it has. And you could see a nice trading bounce which may take it up by 10-15% or so. Usually you do have those counter cyclical rallies which do take place, but then one should take advantage of those rallies and switch out from Indiabull Housing to some of the more performing and safer NBFCs like Bajaj Finance or L&T Finance, or even could be a private sector bank. I think more or less same prospects for both sectors. So that would be my advice, to remain invested but look for exit opportunities.
Fair point. Let me just toss not just this, but NBFCs generally today, they didn't have a good day. Ashwini, your thoughts on the space in general?
See, anytime rate sensitives are in trouble, NBFCs will fall first, bond yields start to go up, and whatever else happens with high crude prices. So that way, I think financials and NBFCs in particular could face a sell-off.
There are some who believe that banks could lead the index lower. But today, of course, banking sector was a bit of an outperformance thanks to Axis and IndusInd Bank. Well, we're out of time. Deepan, Ashwini, thank you very much for joining in and answering questions from our viewers.
Okay, and with that, it's a wrap from all of us here. Thank you for staying with us. There's more coming up on the other side.